have a big guest joining us from the real estate sector. Mitessh Godrej, the executive chairman of Godrej Properties, is with us to discuss the liquidity crisis that we've seen from the NBFC space and whether or not it's had any impact on real estate. Mitessh, hi, good morning. It's our 19th anniversary. Thank you so much for being with us and, being a part of our journey for so many years. I wanted to start by asking you about what's happening in the sector itself, because after banks trimmed their lending to the real estate sector, developers have received half of their funding from NBFCs. And now with the crisis in the NBFC space, are you seeing some issues with credit availability?
Well, good morning, Sonia. Great to be with you again. Let me take this opportunity to wish all of you at CNBC a very, very happy 19th anniversary, and we're all looking forward to being part of the journey for the next 19 years as well.
Thank you.
I think your question is a very important one at the current juncture in the real estate sector. It's one that, frankly, I don't think we yet have the full answer to. I do think liquidity has been a big challenge in the real estate sector for many developers, even before this current NBFC crisis. So certainly, the big source of additional funding to the sector over the last few years has been NBFCs, and I think the current situation, particularly if it worsens, could have a very major impact on the real estate sector. I think it's a little bit early to tell what that impact will be, but certainly even in the last 1 month, we've seen a lot of opportunity for ourselves on the business development side, as many other developers are forced to now look at immediate solutions to raise capital because they are not anymore able to access capital from their traditional lines. So I think it's certainly having an impact. The magnitude of the impact, I think, will depend on how long this liquidity environment persists. But certainly, I think for a company like Godfrey Properties, we see this as a fairly unique and substantial opportunity to put in place, a business development portfolio that can really help the company scale in the coming years.
Good morning, Mitessh, and once again, on my behalf as well, thank you very much for joining us on what's our very big day. If you can develop that point further, are you taking over people who are very weak and asking you to take over their projects? Are you therefore expanding your portfolio, or simply offering some kind of finishing line for some people? How have you taken advantage of this problem?
Morning, Lata. I think that we're certainly not getting into the direct financing of other developers, but we are already. Our model is essentially to partner with landowners and other developers for most of our projects. So I think historically that had been the partnership with other real estate developers had been a relatively small part of our portfolio. But even before the last few months, 80 to 90% of our new projects were actually in partnership with other developers who were not able to effectively monetize their projects. So certainly, I think these developments on the liquidity front will add a lot of momentum to that process. We've already seen in the last month a significant increase in the number and scale of the kind of conversations we're having. So certainly we hope to be able to demonstrate in the next 3 to 6 months that this should be by far the greatest ever period for Godfrey Properties from a business development perspective. And I think we have been planning for such an event in some ways. We, in the first quarter of this financial year, did raise some equity at the entity level for the first time in 5 years. So we raised about 1,000 crore. So I think we're well capitalized and able to now look at this to put some of that capital to work and significantly strengthen our portfolio. And certainly I think that what we're seeing in the market is that the opportunity to do so is extremely strong.
I take your point, Mitessh, about Godfrey Properties not, facing the brunt of what's happening with the industry. But can you throw more light on what's happening in the industry itself? I mean, with NBFCs cutting back on disbursals, have you seen a large chunk of under construction projects that are jeopardized or could be jeopardized going ahead?
Well, I think it depends, on a project-to-project basis and what the level of financial closure in the project is through actual customer sales. But Sonia, I think it's fair to say that if this current environment persists, there will be a lot of stress on many developers' projects, including under construction properties. Of course, it will also lead to a slowdown in new supply. So I think there are many different factors that will come into play. But there's no question that I think that there already was considerable stress in the industry because, as you know, I think the large swath of developers in the country were having great difficulties attracting customers to their projects. They were sort of extending their ability to manage that environment by taking on additional debt, largely through NBFCs. With that window now coming under pressure, there really doesn't seem too many options. So I think developers will have to now look at either partnering with other developers, looking at very quickly monetizing existing stock and so forth. But certainly I think there is a high degree of stress in the sector at the moment.
So will all of this have an impact on prices? What is the price trend looking like over the next 6 to 12 months?
I think it well might. I think, Sonia, historically I've been reluctant to say that, and I haven't really thought that things like, say, demonetization or Real Estate Regulatory Act and so forth were likely to have any impact on prices, and in fact they didn't. But certainly, if this liquidity environment remains as tight as it currently is, I think there's a reasonable chance of some amount of property price correction. But I would estimate that any such correction would be extremely short-lived, because the fact of the matter is that margins in the sector have actually been under pressure and are not at historically high levels. So even if for liquidity reasons you see a short-term price correction, you won't see fresh supply coming to the market at these prices. So I think it's very hard to project over the next 6-12 months whether prices come down, but I would say that there's a reasonable probability that they may, particularly depending on how sentiment moves with things like the upcoming elections and so forth. But I think that will be a very short-lived phenomenon because, again, supply has already been slightly constrained in the sector for the last few years for a variety of reasons. And actually, we believe there's a lot of pent-up demand in the sector now because you've had 5-6 years of cyclical weakness. So our expectation is that in 12 to 24 months, you'll start seeing volumes come back in a big way, and that over time, in the medium term, will lead to price improvements. But I certainly wouldn't rule out a short-term price correction.
Okay. Well, actually now, important news coming in from HDFC Bank. We may be seeing wholesale rates coming down over the past few days, but HDFC obviously sets the MCLR depending on the previous 4 weeks. So they've raised MCLR rates, not by much, 5 basis points. Pirojsha, what's your own debt?
Our own debt is about 1,500 crore at the moment.
Okay, and likely to increase?
So actually, we're currently, Lata, actually looking very aggressively to put capital to work. Ever since our IPO in 2009-10, we've guided that we'd like to be at a gearing level of anywhere between 1:1 to 1.5:1. We're currently at about 0.6:1. So I think we're certainly in a space and environment where we see a lot of opportunities for investment, which fits very well with our strategic intent to put a lot of capital to work. So the equity we raised in the first quarter was entirely to fund growth and business development, and we think there will be a lot of opportunities, as I mentioned, to put that capital to work in the coming months.
On that optimistic note, Pirojsha, thank you very much indeed for joining us. So Godrej Properties prepared with low debt levels, good capital levels to take advantage of the opportunity.
Oh yes. For now, though, the market is slightly off the highest point. Not the bank nifty, which is obviously gaining because of the positive macro cues, but because of a couple of these IT names, the nifty has not been able to sustain the gap up, slightly off the highest point, but that happens. Let's see if at lower level there is going to be some buying as well. We have Ashwini Gujral, Mitessh Thakkar and Sandeep Wagle with us for fresh trades. Ashwini, your thoughts on the first 45 minutes and what are your trades now?
See, one thing I want to put on the table is that all of this year we've done 10,000, 11,000, 10,000, 11,000. Now that cannot continue to infinity. So there's a very good chance that this 10,500, 600 stops the market from going down this time, and then we are able to take 11,000 out. So that people should take on board, and that way, for the day, you are a bit choppy. Now, maybe in the second half things kind of pick up and there is short covering, etc. So for the moment, I think you can buy into Bank Nifty and see what happens. But today will be a fairly narrow type of day, and you have to take it off fairly quickly.
Okay.
Having said that, HDFC Bank is a buy with a stop of 2100, target of 2220. ICICI Bank is a buy with a stop of 345, target of 362. And HUL is a buy with a stop of 1780, target of 1845.
Okay. Mitessh, good morning again. What are you trading at 10?
Good morning, Lata. Gail is breaking down. In fact, it's come down slightly, but around 336 half, 337 would be a good level to go short. Keep a stop at about 342 and look for 322 as the first target. And I have a buy as well, Godfrey Phillips. I think that's the stock which is showing good traction on the short-term and intraday charts. And that one can be bought. Keep a stop below 900. Look for targets close to about 945.
Okay, that's Godfrey Phillips. Z Entertainment, by the way, has been making higher tops and higher bottoms. Well, that sounds so technical analyst of me, but it has been doing that over the past 2 months, and it's now the biggest Nifty gainer. It's up almost about 3% Sandeep Bagle is with us as well. Sandeep, hi, morning. Your thoughts on Z Entertainment and any other stocks that you like?
Good morning, Sonia. I would be bullish on Z Entertainment. I think what you're saying is right, and your language is also that of a technical analyst. I would talk of, in fact, I have been talking of a 510, 515 target over the past few days, and I see that coming. 460, it should not break on the downside. My calls are a buy in a Bata, which is giving a breakout, stop loss of 1050, target of 1075, and a sell in a Gail, which Mitessh talked of. I also see a clear breakdown, stop loss of 343, target 325.
All right, Sandeep, thanks a lot for those trades. Mitessh, a word on Jubilant Foodworks, that's breaking down a bit in a good market.
That's right. I think, the stock actually has been showing good strength, and now I think it's giving a correction or pullback, as we would call it. I think the first support is around 1255, but if it continues to break below that, then I think you will see your weakness significantly increase over here.
Okay, and any of the pharma stocks that we would be looking at, Mitessh?
I do like Dr. Reddy's, and to a certain extent, I would say, I'm waiting for DVs to possibly give some signal on the intraday charts. But between the two, Dr. Reddy's OPS have already started the move. So I think that could be an interesting buy. I've maintained that the stock will head towards 2900 in the next few months. So I think by end of January, I expect those levels to be met. So I think that remains a buy for me. Currently, if somebody wants to buy, start accumulating right now on a 20-point dip, add more and keep a stop below 2630 here.
Okay. Thank you very much, gentlemen, for joining us again and giving us your 10 a.m. trades. We will touch base with you. And to all of you viewers out there, here is another birthday bonanza. Adrian Mawat, Emerging Equity Markets Strategist, joins us now in our studio. Adrian, thank you very much for specially flying in from Hong Kong to celebrate CNBC TV 18's 19th birthday.
Well, I feel I talk to you more often than my own 19-year-old.
Feels the same, right? Thank you so much.
Our feelings are mutual. But what is your fondest...
19-year-old son, Adrian, good morning.
Yes, I've got a 19-year-old son. Yeah.
Oh, wow.
Okay, what is your fondest...
And a 22-year-old daughter as well. So.
Oh, an older daughter as well?
Yeah.
Okay, well. What is your fondest memory of the past many years that you've interacted with us?
Well, I was reflecting last night. It was an event with Lata where it's 25 years since FIIs came into the market. So when I arrived in '93, there was very little information at all about the stock markets, let alone having TV news channels. Yeah. But it's always been very fun interacting with CNBC because the depth of coverage that you get on business news in India is much better than I've seen in any other emerging market. And you're competing in a very competitive space as well. So there's sort of the resources, the people you bring on. But what I've always enjoyed is how, you build these segments together with CEOs of companies, some senior ministers, etc. And, there's a continuity through the show. So congratulations, happy birthday.
Thank you so
Adrian,
much.
And it's really impressive. You're the only one who remembers that this is the 25th year of FII investments in India. We started in like 94. Yeah. So it is the 25th year.
Back then in August 93, there was $69 billion US was the market cap rather than 2 trillion for the BSE now. Yeah, do you know how many cars on average were sold back then? It was 12,000 a month in the whole of India. If you look at the passenger vehicle numbers.
It was 12,000 a month.
Wow.
Well, what was your choice? You had an ambassador from Hindustan Motor, or Premier Auto would sell you a Fiat.
Yes. And then the 800 came in from Maruti.
Well, yes. Yeah. Well, actually, Maruti was back in the mid-80s. I remember I drove a Maruti Suzuki back in '85 when I was living in Pune.
Oh, that's
and
nice.
That was, and they were very difficult to get. There was a huge long waiting list.
You know what? And exactly, and Bajaj Auto Scooter or the cylinder of Indian Oil. But anyway, and of course, those are the times when the market would move 50 points in a matter of entire month. Now we do that in a matter of 3 or 4 minutes. But you know, since
it couldn't do that. So I'll tell you a story. We were running this India fund, and it was quite big. It was $100 million, and our average unit size was about 1.2 million. But this was a smaller company, so I bought $1 million worth. What I didn't think through was the board lot was $5. So you had a share certificate, and you had 2 other documents with it. So I turned HSBC into a logistics business because they had to move 600,000 pieces of paper and then process them. So the reason the market didn't move very quickly was every time you did a transaction, the paperwork you would generate would be extraordinary. And it wasn't unusual for it to be 6 months before you actually had deliverable securities again.
You know, these anecdotes are amazing. I mean, when you talk about 12,000 cars a month, now the company that has the least market share sells more than 12,000 cars perhaps a day, you know, so that's the kind of market that we've evolved into. You've been here, you've seen this market evolve so many years. What's the next big trend according to you?
So I think there's a lot is going to change, and there's been some very important policy implementation. So this Insolvency Act, I think, is very important. And remember, the issue with an Insolvency Act is the legislation is very good, but then you need the soft parts, which is experienced judges, lawyers, accountants. But once you get that in place and people build confidence with that, then I think the financial system will get even more sophisticated. And the type of funding that you'll see in place from the private equity markets, you know, the ability to fund perhaps some of the renewables that'll be very important for providing power for this country. So I think there are some significant changes that come out of reforms that have happened over the last couple of years.
Okay. Adrian, since you spoke about the first time the FI investment came in, let's talk about that now. Some sign that the FI money might be coming back after a long hiatus. Is that the right way to read it?
Yes, I think this was an extraordinary year, 2018. You had US interest rates moving up quickly, and there was a lot of confidence that they would keep on moving up until about 4 or 5 weeks ago. And so the interest rate differential between the dollar and the euro built very rapidly to nearly 3%. There's no interest rate differential between the renminbi and the dollar. So you've got a very strong dollar, a flow into dollar assets, particularly fixed income. And then for the equity market, the earnings growth in the US was nearly 24% at its peak, so the EPS year-over-year growth, whereas in EM it was just under 10% and being revised down. So the risk assets all went to the US. Now, as we look at 2019, I think that is changing. So the interest rate expectations are being moderated for the US, and we have long bond yields dropping well below 3, which is just amazing considering where we were in September. And so I think dollar strength has come to an end. You get a rebound in EMFX, pressure on EM money markets, liquidity situation eases. That gives you a leveraged effect. So when your currency is weak, interest rates tend to go up, monetary conditions tighten, confidence in growth goes down, P multiples derate. We go through the opposite in 2019. So I think there's a flow of capital into EM, and India will benefit from that. Whether India gets its share, more than its share, or less than its share, is a function of what happens with the trade dispute between China and the US, and whether the Chinese economy is deemed to be improving. If you get those two conditions, then I think disproportionate amount of capital flow will go into North Asia, Korea, Taiwan, and China. If you don't, then India will get more than its share of the flow into EM.
And your bet is that a deal will be struck and tariffs won't go to 25%?
Yes, that's my bet. But big caveat, predicting what President Trump will do. is not a very smart thing to do. What I would reflect on was that the pace at which NAFTA was renegotiated, the fact that the Americans came to an agreement with the Mexican government, particularly the future president, President AMLO, was quite surprising. Remember, they did come to a deal with the Europeans. Yes. I also would like to make a point that we're in a world where there's a lot more free trade, not less free trade. There's a very significant free trade agreements between Europe and Canada, Europe, Mexico, Europe, Australia, Europe, Japan. So those, Japan is still the world's third largest economy. Yeah. So the world is moving much more in the direction of free trade. The outlier is President Trump and Navarro, Lighthouser, etc. That's the outlier.
So with respect to India, you did mention that the Insolvency Act has been a very important development, and you said there was some more significant reforms. From a foreign investor's standpoint, what else has India been doing right? Okay,
so GST, at the moment, GST, maybe the media around it is slightly more negative, it's another bit of paperwork, no one likes taxes, etc. But GST is about creating a free trade zone in India. This is about making a factory in India address nearly a $3 trillion economy, $3 trillion US economy, rather than addressing a state economy and then having to deal with octroi, etc. So I think we're underappreciating the importance of that. And that's a very big efficiency gain. I think that makes India a much more attractive place for foreign direct investment. And so these types of reforms, we tend in capital markets to think, well, immediately I need to discount that. But these are structural reforms. These take many years to play out. And you look back on them and you realize how important they were.
You told us earlier that, in your pecking order, at the moment, assuming that a trade is, peace is struck between US and China, China is your best bet in the emerging markets. What would you buy at all in India?
So for me as a strategist, I'm struggling a little bit with India in terms of developing a strategy. So if we think about this year it was to buy exporters, right? Weakening currency. And to some extent, there was playing energy names as well. All those have to reverse now. So you want to get more domestic. But what we need to be conscious about, where is your domestic market capitalization? Okay. So we have the banking system, we have the NBFCs, but that to me is incredibly stock specific, right? There are a whole series of events going on there. Today you could have at the beginning of this year said, I should be long banks. Yeah. But if you're long HDFC Bank, you're probably quite happy. If you're long Yes Bank, you're not happy. Yeah. Bajaj Finance is doing quite well as an NBFC. But being asked a general question as a strategist, should you buy NBFCs? My answer to that would be very carefully, if at all. So I think India, from a strategy perspective, is a difficult one to say is going to outperform in 2019. Let's also remember, even with the moves we saw in markets, the Nifty is up barely year to date, but it is up. It's not down 20% like Shanghai is, etc. So I want a bit of a domestic bias, but I'm struggling a little bit to put that together. Maybe some two-wheelers. It's not necessarily that you're going to go aggressively into FMCGs, because you probably don't want too much of a defensive bias here if the interest rate outlook is looking more favorable than it was. So the market composition is a little bit frustrating for when you want to get a bit more cyclical.
The only issue is some of these names like Lever perhaps have not been, have not shown defensive characteristics. They have been the biggest wealth creators over the last 12 months, 1 year, and they've done well in all markets. I mean, consumption pieces that you don't want to be too defensive, but names like Hindustan Unilever in India, or say United Spirits, or a Jubilant Foodworks, the absolute consumption story, you want to buy that?
So if we think about, do I want to get a bit more of a cyclical bias? The answer is yes, because the outlook was going to be that the RBI would raise rates a bit more. That's all been modified, hasn't it? We've revised down the inflation forecasts. And so I'm looking for a slightly more cyclical exposure. And classically, I wouldn't go and buy a fast-moving consumer goods company if that was the situation. The other thing we need to be conscious here is, although this move in interest rates might be good for industrial investment, it might be good for the urban consumer. The data on the rural consumer has been a little bit disappointing, and I think when we look at the most recent GDP numbers, that's what was coming out. And near term, I don't see an obvious driver for why rural incomes will accelerate in 19. The moves that we're talking about in interest rates and oil will tend to favour urban and tend to favour the industrial sector rather than the consumer sector.
Alrighty,
which might mean we get a little bit more into some mid-cap names where you might get more of your cyclical exposure. And with the route that we've seen in markets, that perhaps is where the value is.
All right. Thank you very much, Adrian Mowat, for dropping in.
And happy birthday again.
Thanks a lot.
Are you in India for long, for work,
I leave. I've been here since Wednesday. I leave tonight.
Okay. Have a great, safe flight back, and thank you so much for joining us.
Thank you.